Hey everyone, it's Hamish from the Young Investors Podcast. Myself and Brandon are excited to bring you your weekly rundown of the latest business and investing news from around the world. A quick reminder before we get started, any advice provided by Brandon is general and does not consider your financial situation, needs, or objectives, so consider whether it's appropriate for you. Brandon Kolk is authorized to provide general financial product advice in Australia and is authorized representative number 1305795 of Guideway Financial Services Proprietary Limited, AFSL number 420367. Please see the description box for Brandon's financial services guide. Past performance is not a reliable indication of future investment returns, but with that said, let's get into another episode of the Young Investors Podcast.
All right, everyone, welcome back to the Young Investors Podcast. We've got a very special episode coming at you today. If you're watching on YouTube, or I guess on Spotify as well, you can watch video on Spotify, then you already see. But we don't have to deal with lag today.
No.
We don't have to deal with any of that, breakage of the wires somewhere along the line between Canberra and Victoria, because you're here with me.
Hey. Yeah, we've had some bad lag problems the last couple of episodes.
Just
in particular, yeah. It comes and goes, I feel like. I think it's both of our internet is a little bit patchy at times. So, yeah, it's good to be here. Yeah, thanks for inviting me out to the studio, to the office. It's get to see the whole gang and see that there actually is work going on over here.
Surprisingly.
I wasn't sure for a while, but there is.
There actually is. There are humans that work here. Imagine if I just completely constructed this fake
it's just a green screen.
Oh, me and the guys, and there's just no one here.
There's no one here.
It's me in an empty room.
It's like a tiny little cubicle of a
office. It's just in a conference room somewhere.
Yeah.
No, it's good to have you here, dude. It's good to have you here, and hopefully these in-person podcasts always go a little bit haywire. I don't know. There's just something about us being in the same room at the same time.
Yeah.
That I don't know. I don't know what it is.
Yeah. But I don't know. It just flows a bit freer. I think it's just, So we'll see.
Freer, looser?
Yeah.
I would use the word looser. But
looser.
We'll see. We'll see how we go.
Yeah. We've got a couple of things that we'll talk about. And we'll just kind of see how we go. We may end up just riffing through a bunch of stuff. And we'll try and answer a few of your questions as well today. Should we
what are we talking about? What are you going to talk about today?
13F
filings?
Well, yes, so we've got the 13F filings. I'm gonna be honest, there wasn't a whole lot of stuff to talk about.
Don't give it
There's
away.
There's a couple of things that are crazy that you can't miss. No, there's nothing crazy there, but there are a few notes that we'll kind of talk through. We got US inflation that was reported, US October's inflation reported last week that we'll talk about. I'm going to talk about the end of a very long court battle between McDonald's and Hungry Jack's.
Oh, okay.
And what have you got?
I'm just going to talk a little bit about the Las Vegas Grand Prix, because that's happening this weekend, and there's so much interesting stuff to talk about with that. It's quite an ordeal, really, hosting that race. So I want to talk about that a little bit because I'm a big F1 fan. Yeah. But also, we've got a very interesting news story that Warren Buffett, the man, the myth, the legend, he's in a bit of hot water at the moment. So there's actually a little bit of drama. Yeah, Warren Buffett drama, which doesn't happen very often.
That's a rare sentence.
That is a very rare sentence.
Yeah.
So we'll talk about what's going on, because being picked up a lot in the media at the moment as to what he's done and what the issues are, and
interesting.
And it's both. You can slide both ways. You can say, Buffett, that probably wasn't good, and then you can also side being like, it's really nothing. So we'll talk about that.
Yeah, you might have to take down that big picture of Warren Buffett. Who knows?
I don't know. I can't see myself. I'll just hold my hand up.
Not sure if people could see it.
Don't mind. Yeah, they probably can't even see it actually with this framing. But anyway, is what it is.
Well, with that said, today's episode is brought to you by Seeking Alpha, your one-stop shop for stock analysis, market data, and news. Access expert analysis and news for thousands of stocks. View buy, hold, and sell ratings from members, Wall Street analysts, and Seeking Alpha's own algorithm. Screen for stocks using a variety of fundamental and technical analysis metrics. Access 10 years of financial data and company filings, and manage your portfolio by tracking your investments with price alerts so you never miss a buying opportunity again. Click the link in the episode description or head directly to seekingalpha.me/young investors to try Seeking Alpha free for 7 days and also get a $50 off coupon if it's your first time signing up to their paid subscription. That's seekingalpha.me/young investors. Go check it out.
Now, Hamish, I think logically we start with the 13Fs, but I kind of want to talk about this Warren Buffett scandal.
Yeah.
Do you want to talk through that for a little while?
Yeah.
First up.
Yeah.
Because I think this is actually pretty interesting. So as I kind of alluded to in the intro there is a lot of chatter around Warren Buffett. There was an article published by ProPublica, and what they found is over the last few decades, they found 3 different instances where Warren Buffett might have been doing a little bit of personal stock trading ahead of what Berkshire Hathaway was going to do. So he was essentially trading the same stocks that Berkshire Hathaway was. Yeah. So I wanted to go into a little bit more detail. So the ProPublica article says, on at least 3 occasions, Buffett has traded stocks in his personal account in the same quarter or the quarter before Berkshire bought or sold shares of the same companies, doing so before the conglomerate's moves were disclosed to the public.
Right.
It also says these trades may violate Berkshire's ethics policies authored by Buffett himself, which require, quote, all actual and anticipated securities transactions of Berkshire be publicly disclosed before Berkshire employees can trade the stocks personally.
Right. Interesting.
Yeah. So there were 3 different. I'll talk you through the 3 different times that they found there was a bit of a conflict, and then we can kind of talk about.
Yep. We should say the way that ProPublica, what is it?
ProPublica.
ProPublica. How they know about these trades is they got some leaked tax forms, I think. Of Buffett's,
IRS forms.
So that's how
that.
This is they don't obviously release the actual tax files, but this is it's
they've had a look at them.
Supposedly verified.
Yeah, they've had a look at them. They cross-reference with what Berkshire's done in the past, and then they found a couple of things. So what they found, the most notable one, they've written here. They say Warren Buffett, the legendary investor known as the Oracle of Omaha, repeatedly sang the praises of Wells Fargo in an interview with Fortune. The bank, Buffett said, has come closer to an effective business model than any other big bank by some margin. He detailed the ways in which Wells Fargo was more valuable than it seemed and compared its chair to Walmart founder Sam Walton. The interview was published on April 20th, 2009, so this is ages ago. But apparently, Buffett was so influential that Fortune noted he had caused a 20% plus jump in Wells Fargo shares.
Wow.
In the previous month, simply by expressing confidence in the bank on TV. Now, on that day, Buffett also privately sold off $20 million worth of Wells Fargo shares in his personal stock trading account.
Ooh, interesting.
That's the one that they're taking issue with. So that's the first that's the first big notable one. They also noted 2 other instances. In October 2012, Buffett made another trade. So over several days, he sold $35 million worth of Johnson & Johnson shares. At that point, Berkshire had effectively revealed that it too had sold Johnson & Johnson shares from a quarterly filing. So we're not exactly sure what came first, but both of those trades were around the same time. But then Berkshire had the problem is that Berkshire Hathaway, so Buffett sold in that same quarter that, Buffett sold personally in the same quarter that Berkshire did. However, Berkshire then went on in following quarters after Buffett had already sold to continue selling down their stake.
Right. Okay. Yeah. So he's there clearly has, at least to some extent, personally sold shares in the company before Berkshire went on to sell a very large,
before the flood of
much larger amount.
Yeah.
And of course, just the fact that Berkshire is selling obviously would move the stock as well. It's crazy how he just goes on TV and talks about Wells Fargo and the stock moves so 20%. Significantly.
Hectic.
So there is, something to be said about people involved in Berkshire personally trading before Berkshire makes those moves.
Yeah.
Especially because Buffett is basically Berkshire.
Yeah.
When we say Berkshire traded, we're saying Buffett traded through Berkshire.
I guess we're saying Berkshire because, we're trying to separate company stuff from personal stuff. Yeah. So Buffett is his personal trading account.
Yeah.
So they were the first 2, right? And then the third instance, in August 2009, Buffett appeared to move in his personal portfolio in the opposite direction of Berkshire's portfolio. He sold 25 million of Walmart stock in his personal account, even as Berkshire almost doubled its stake, which had previously held steady for 15 quarters during the same quarter. It's unclear which transaction came first, but no matter the order of events, it raises the question of why Buffett made one choice for his own portfolio and the opposite choice for Berkshire investors. So that's the one where I think it's less of an issue because of what you were saying before. How it's it's quite likely that he just
He didn't want there to be some kind of conflict.
Yeah,
he didn't want. It's kind of like he's abiding by the policy, which is he doesn't want to personally own a stock that Berkshire is trading.
Yeah.
Although he did, I guess, already own the stock.
Yeah. But he sold it before Berkshire then went and did some stuff.
And it's important to know, it's really hard to understand what is actually going on because we only have a couple of instances of where he sold shares. Like these are tax filings. So this is where Buffett is reporting he sold a stock and therefore had a capital gain or a capital loss. There's no information about when he bought it or how long he held it for or anything really like that. It's just that he sold at a certain time and had to file with the IRS to report that. So, but yeah, this is the one that is the most explainable, I think. If you were really criticizing these trades, I think this one's the most explainable, and the other two have elements of being a little bit. The
first one with the Wells Fargo is probably the most questionable.
Yes.
Yeah. Where he does this interview, he pumps Wells Fargo, the stock goes up by 20-something%. And then on that same day, he conveniently sells, what was it, $20-something million? $20 million worth of Wells Fargo shares in his personal account.
Yeah.
So that's the setup. And I don't know what your take is, but you could probably make an argument he's broken his own rules, around personal trading accounts versus, he's an insider at Berkshire.
Yeah.
And he knows what he's going to do with Berkshire.
Yeah.
And he probably has technically violated his own rules around personal trading.
Yeah, I would say, I think the key word there is technically. Just because of the sums that we're talking about here are so minuscule in relation to his net worth, which is 99% Berkshire. So technically is the right word, I think. Technically, he has violated what he said. And the sums do seem big, but as a percentage of his wealth and even as a percentage of how much he traded personally over that period, it's a very small amount.
Yeah, and that's what we're going to talk about. We'll talk about it right now. That's what we're going to set up. These are the trades that happen. Make up your own mind. But then in the grand scheme of things, again, you can argue that, yes, it was wrong. But in the grand scheme of things, does it matter? Does it matter? And you could argue, yes, it does matter because it's about morals and ethics and it's about upholding what you say you're going to do.
Yeah.
But let's take a perspective, is Buffett deceiving or abusing Berkshire and its shareholders to personally profit?
Yeah.
Because when it comes to insider trading, that's what you're kind of worried about.
Yes.
Is that they are what's the word? They are abusing the system to personally profit.
Yeah. Yep, exactly.
And when you start to actually look at the sums involved, it just doesn't seem like it looks like it's, this is a big issue, but it's actually a complete non-issue.
Right.
And it looks like that because of what you said, because of the size of the investments that Buffett's making personally.
Yeah.
I mean, $20 million, the guy's worth 120 something billion dollars.
Yeah. I think Becky Quick was saying it's less than 0.5% or something like
less
that.
Less than 0.5% of his net worth.
Yeah.
Yeah. I mean, he said here, I've got the stat. Overall, Buffett's records show he reported at least $466 million in personal stock sales between 2000 and 2019. It's a relatively modest sum for a person reported to be worth over $100 billion. Yeah. Buffett has in the past described the process of finding a stock for his personal account in amorous terms. It's like finding a new girl to me. But at a Berkshire shareholder meeting in 2016, he waved away speculative questions about his personal trading by saying that the vast majority of his money is in shares of Berkshire, not his personal account, and that he planned to donate almost all of his billions in wealth to charity anyway.
Yeah.
It's like, even if he is enriching himself and being a bad player, all the money he makes is just given to charity. So
it in the end, it just makes it just a complete. It really is not. It doesn't really have anything of substance. But it is funny that he does trade personally, and it seems like he does that for fun because he's not able to maybe invest in some of the companies that he would like to because Berkshire's too big.
Yeah.
There's kind of that limitation. So he plays around with, a small amount of money, $500 million,
Yeah.
just a little bit of his wealth.
Yeah.
Which does make sense because, more than anybody else, Buffett has been the guy who just is obsessed with finding companies. Like that's what he loves to do. So it makes sense that even when scale is an issue at Berkshire, that he would want to continue to do that at a smaller level or a smaller scale in some capacity.
Yeah. Becky did an interview with Charlie Munger and asked Charlie what he thought of the situation. And I'll read you the transcript of what Charlie said.
Oh boy.
Yeah. He said he's getting so loose these days.
Yeah.
He's 99 and he just doesn't care anymore. So I'm gonna tell it how it is. Yeah. He actually swore in this little clip as well, which is quite funny from the 99-year-old. He said, I don't think there's the slightest chance that Warren is doing something that's deeply evil to make money for himself. He cares more about what happens to Berkshire than what happens to his own money. He's giving away his own money. He doesn't even have it anymore. To give away his last $100 million that he has on Earth, and then having done that, they say, "You dirty son of a bitch, you're taking advantage of Berkshire to make money." It's not a plausible argument. It's one more ridiculous thing that is said about Berkshire.
Yeah. That's as plain and simple as you could put it.
Plain and simple.
Yeah. So there you go.
Yeah, I don't know. What's your take? Does this bother you in the slightest?
Oh no.
No.
I think you said it. I mean, maybe there's an element of like, well, he's made all these big statements about abiding by the policy, and then there's some moments where he hasn't done that. But we're talking about 3 trades over the course of, I think, two decades. I think it was that they were looking at his tax documents. So
and like one of them isn't really even questionable.
No, exactly. So you're really talking about 2.
One of them's like, it could go either way, and then one of them's like, nah. That's not great.
Like his personal investments are a fraction of his wealth, and then these trades are an even more of a smaller fraction of his personal trades. So it's a fraction of a fraction. It's pretty insignificant, I think.
Yeah,
but it makes a good headline for what is it, ProPublica?
ProPublica.
Yeah, they got a good article out of it.
The way they wrote that article too is like the classic, like setting him up.
Yeah.
And then bang. Yeah. This guy's a menace.
Yeah. We got him. Ladies and gentlemen.
We got him.
We got him.
All right. Well, Warren Buffett, slap on the wrist and we move on.
Yeah.
What do you want? You want to talk about 13F filing?
Yeah. Let's do 13Fs. I don't think there's going to be, we probably won't stick around too long on this just because there really isn't all that much going on. Yeah. It was a quiet quarter. It's been a quiet, I feel like looking back over the year, has there been any really crazy investments that we've seen from institutional investors? Nothing off the top of my head that was outstanding. I mean, we did follow, we're kind of curious about Prix's short against the S&P and the NASDAQ, and we'll talk a little bit about that because we have some kind of closure on that.
Yeah.
Or some closure. But I don't think there was nothing really stood out as being...
This time around?
Or this year in general.
Did I think Lee Lu loaded up on Google.
Right, okay. Yeah.
I'm not sure if that was earlier this year.
Yeah.
There's been the Activision Blizzard stuff with Buffett.
Oh, yeah.
But I mean, there's nothing like groundbreaking.
No, nothing groundbreaking. But anyway, so yeah, we've got the 13F filings, which of course the financial institutions that have more than $100 million in assets have to file every quarter, report which stocks they have, and then as a result, we can see what trades they've made during the quarter. So first up, we've kind of got, I thought we'd just kind of go through who did nothing, which there's quite a few people who we like to follow who pretty much did absolutely nothing during the quarter.
Yeah.
Lee Lu is on that list. Norbert Lu was also on that list, although the one change that he made was a 0.73% position in 3-month treasury bills.
Right.
So,
okay.
That's a crazy investment. Whoa. Put some money.
Load up the truck.
Yeah, in a 3-month bill. Charlie Munger did absolutely nothing, as he has for, I think, many, many quarters.
Many quarters now, yeah.
Yeah, and Guy Spear is another one as well.
He's also been inactive for quite a while.
And that's what you kind of get with a lot of these value investor guys. I mean, sometimes they go multiple quarters or a year or even more than a year without even making a single trade.
Yeah, and you got to remember why that is. The fundamental reason why that is these guys all subscribe to the same principles of investing. The strategies might vary a little bit, but all the same principles. And one of their principles is that they don't go in, out, in finding like hundreds of mediocre investments per year. They're in, out, in, out, in, out. They're much more focused on just biding their time, just watching from the sidelines, and just when they get the one golden opportunity, which might come along every 5 to 10 years. Like you might not get a great opportunity like for many, many years, but when it does come along, that's when they pounce. So normally when you see activity, it's worth talking about. It's significant, but chances are you probably won't see that much activity.
Yeah,
That's
absolutely.
kind of the reality.
And even though there's no activity, in the last couple of quarters from some of these guys, if you look in their portfolios, most of them have a couple of significant positions that they've held for a very long time, and those positions a lot of the time have done very well. So it's them not making changes, but yeah, as you said, they've kind of built these positions in companies that they trust and that they find value in. Those were the guys who did pretty much nothing. In terms of Berkshire Hathaway, I thought I'd just segment them out. They also pretty much did nothing, but I thought I'd just mention them separately, just because everyone kind of likes to keep a finger on the pulse of
what big news, isn't it?
Yeah, what Buffett is doing. But yeah, they pretty much did nothing. The biggest change was two biggest changes were they sold the last bit of Chevron, which I think was at its peak about a 5 or a 6% position in the Berkshire portfolio, if I'm not mistaken.
Right.
But that had already been selling off that position in previous quarters. The recent quarter was just less than a 1% change. So it was literally the last like crumbs of that investment that they sold off. The biggest buy during the quarter was they bought Liberty Media Corp.
Right.
However, it's they bought the two different types of shares of that company, but it represents just 0.1 and 0.05% of
I reckon that's
the portfolio.
Yeah, Ted or Todd. I think Ted or Todd has experience investing in Liberty from the past. I seem to recall.
Right.
I'm not 100% on that.
Yeah. I mean,
but it's so small.
Yeah, when it comes to these tiny positions, you have to believe that it's probably Ted and Todd and not.
Well, I don't know. Maybe. Oh, yeah, true. Because Warren would have been doing that in his own little personal account.
Yeah, exactly. Hold on a second.
Hey yo.
So yeah, a lot of people doing pretty much absolutely nothing. The two people who made some moves that I thought I'd talk about were Monish Prabrai and we'll also talk about Michael Burry. Monish Prabrai. So at the beginning of the quarter, he had no US positions.
Wow.
So yeah, last quarter he sold all of his US positions. He had a bit of Micron that he got rid of, and the Brookfield, I think, as well.
Yep, that's correct.
Off the top of my head,
that's correct.
Monish obviously has significant positions outside of the US. So when you see nothing in there, it's not as if he's in cash. He has positions in Turkey and all kinds of places.
Yep, India. Yep.
But he's back. He's back investing in US companies. He added some positions. He added 3 companies. And they're all resource companies, actually.
Interesting.
Which, I can't say I'm super familiar with the whole, particularly the US resource market, let alone any other market. But the 3 companies were Alpha Metallurgical Resources, if I'm pronouncing that correctly.
Right.
That company is a coal supplier and mining complex, coal mining complex in the US. Then there's Consol Energy, which is a coal energy company. And then Arch Resources is the second largest supplier of coal in the US. So you've got coal.
Interesting.
So there you go.
Very interesting. Maybe he'll be coming to Australia soon. We'll have to catch up if he's looking for coal miners.
Yeah, and if you had to ask me what's the least thing that I know about resources, it's probably coal. So.
Well, I think I've just never looked into it because there was, personally, it doesn't kind of align with my values. We got a lot of dirty coal companies in Australia, but from my understanding from the limited research I have done is that coal as a source of energy is really being phased out.
Yeah, it
much
seems that way.
Faster than others. So obviously oil's used everywhere.
Yep.
Gas is being used more and more as coal is dying away.
Right. Yeah.
And then obviously we've got the renewables, which is hopefully where we want to be in the long run.
Yeah,
but,
that makes sense.
If you just look at the just basic charts of coal demand over time, it's like it's not looking great.
Yeah.
It's just, and it's getting economically, it's getting worse and worse to be in coal.
Right.
So interesting. I mean,
the thing with Monish is he still likes a cigar butt. He still likes those. Honestly, I haven't really looked at these companies at all. I just kind of wrote down which ones they were, but I wouldn't be surprised if they produce a little bit of cash flow from time to time, and their prices relative to cash flows are extremely low.
Yep.
So it's a
Low
cigar
multiples.
butt, low multiple. Monish loves to jump into those.
And that's what he's done. What was it? There was was it a Turkish or an Indian company, like really low multiple? He figured out that, man, if they just get like a little bit of multiple expansion, or if they like just keep cash flowing as they are, surely they'll get found, and then they'll, the price will just rise. He'll make a load of money.
Yep.
So that's I would imagine you're exactly right, that it's a similar kind of bet. It's like, well, sure, maybe the long-term future of coal's not great, but we're looking at the moment, these companies are so cheap. They've got, good contracts or whatever it is. They're selling, they've got good cash flows, and the market has just absolutely dropped them. So maybe that's his play.
Yeah, exactly.
Ultra value.
Yeah, I mean, even if the company, like if you said the company's not around in 20 years, that doesn't mean it's not a good value investment. I mean, there could be 1 year left of cash flow, but if the stock is cheap enough, then on a mathematical basis, it could make sense. So, and that's kind of the cigar butt, generally the cigar butt approach. So, so that's what Monish is doing. But again, most of his portfolio is, unfortunately, we can't see it because it's outside of the US, so he doesn't have to report them on the 13F. That's Monish. Finally, we have Mr. Michael Burry, which, as we kind of spoke about, we noticed in his last 13F that he had a short position. He was buying put options against the S&P and the NASDAQ. It's basically betting against the stock market. And we can now see that he has closed those positions, so they're gone. So they were super short-term bets, which seemed fairly likely at the time. It could have been the case that it was a really big bet with looking for a small decline in the S&P 500 or small decline in the market, or a really small bet betting on a big drop, maybe like a 30% drop or something in the market.
Yep.
It looks like, especially considering it's closed, it probably was a very small bet, like basically an insurance policy or a hedge against a large drop in the stock market. Although we'll never know. Burry has unfortunately been very silent on Twitter. Usually he's quite active, telling us everything he's doing.
I want him to come back.
Yeah, I want him to come back too. But
how do we get in touch? We got to write to him.
Yeah.
Dude, you got to start up your Twitter again.
Yeah, please come back.
Yeah. Oh, I was talking to Guy Spear when I interviewed him, and it was so weird, just off camera. We were just talking about, because he's seen that I'd made some content around Michael Burry.
Yeah.
And he was like, "Oh yeah, I know Mike Burry." I was like,
wow.
Can you get me an interview?
Yeah, that would be crazy.
But nah, he said he doesn't know him that well.
Yeah.
And it's so weird because Guy's just like, "Oh, Brandon, you might find this interesting." And he types in his emails, and he's like, just searches Mike Burry.
Yeah.
He's like, "I first got in touch with him back in like 2000. And I wrote out, hello, Mike, I like your forum posts, like back in that era." It's just crazy because I did find it really interesting that these guys were talking like way back then.
Yeah.
It was just hectic.
There's just an email there of Burry being like, "Oh, I see this housing market thing. It looks pretty good, Guy. What do you reckon?" Guy's like, "Nah." I was like, "That's rubbish, Mike."
But that was just such a bizarre moment because we keep up with these people, but we never like imagine they're all like talking to each other, and like Guy Spear talking to like Bill Ackman and talking to Mike Burry, and Mike Burry's talking to this, but it's just crazy.
Yeah, that is.
It makes me like my mind blow, even when they're just like talking like, "Hey, how you going? Yeah, good, thank you. Just going up to Yosemite for the weekend or something like that." It's like, what the hell?
Yeah, it is. That's wild. That's crazy.
Anyway, sorry.
So so the one thing I did note was so during the last quarter, the NASDAQ, which he was betting would go down, did drop, but it didn't drop a huge amount. So it's we have no idea if he made money on this. The only way we would have known is if the market was down like 50%. Like we'd be like, okay, he probably made a lot of money on that.
Yeah.
But with it being only down a little bit, and the fact that we don't actually know when he closed these positions, we have absolutely no idea. So
anyone's guess.
which is unfortunate. But as usual, He completely upended his portfolio, as he does every single quarter. He sells everything, and he rebuys. He buys a bunch of new stocks. So he completely upended his portfolio, sold everything. His biggest positions now are Stellantis at 17% of his portfolio, Nexstar Media at 16%, and then what do we got down the list? Booking Holdings at 11%, Alibaba. He's back in Alibaba.
Oh, really?
At 10%. He had JD.com at about 8% of his portfolio. There's a lot of companies. He's notorious for having 15 to 20 stocks at any time, and he sells them all and buys 15 to 20 new ones. So
I feel like the way I'd summarize his strategy, or this is what I think, I don't actually know. I feel like he's got a list of businesses that he has gone, because he is a value investor.
Yes.
I feel like he's got a list of businesses that he thinks are good, like solid companies, long-term, healthy companies. And this list is like 25, 30 businesses long. And from there, instead of doing what Buffett does, where he just waits until it's cheap, buys it, and then just holds it forever, he takes that list of companies and he just trades them.
Yeah. I think that's pretty likely. I think he's much more interested in buy price, sell price, and having this kind of range of intrinsic value and getting in and out between, as companies kind of bounce around in between those ranges. It seems that way, at least.
Yeah, and the reason I say that is because he always upends his portfolio, and it's like an entirely new set of stocks every time he puts in a 13F. But once you actually start following him for a while, you see it's like the same stocks that kind of bounce in and out. Yep. Like Alibaba's not the first time, Curate Retail and stuff like that, it comes in and out.
Yeah.
Some of the private prisons, they come in and out. And you can kind of pick up these themes that probably these bets where he thinks there is a thesis there over the long run, but he is very price sensitive and he gets in when he wants to and he gets out when he wants to as well.
Yeah. I think that is absolutely correct.
Yeah.
That's pretty much it. Obviously we can't go through every single 13F filing, unfortunately.
Yeah.
But those were the main ones that stood out to me. So
and for those that ask us, where do we get this information? Usually we just look at Dataroma. That's a really good website. They've got like 70 something, 80 odd super investors.
Yeah.
All the big names are there. And it's really nicely summarized. That's not the only one.
Yeah, the only thing I would add on top of that is there's a website called Whale Wisdom.
That's a good one.
And that one will show you put and call the options contracts that are held in these positions, whereas Dataroma does not show that. So Dataroma is really like the good place to look because it's like the easiest to read and to look. You can just look through the names of the super investors there. But then you can also jump over to Whale Wisdom and see, especially with someone like Michael Burry, who often has put option contracts or call option contracts. You can kind of see what short-term bets he's placing as well.
Yeah, cool. All right, is that that's the 13Fs, eh?
That's it.
What do you want to talk about next?
Let's
Can we talk about the Vegas Grand Prix just because I want to?
Yes. Yeah, I feel like this snuck up so quickly.
It did.
It felt
remember when we were talking about we wanted to go?
Yeah.
We were actually like, can we go to this thing?
Yeah. Maybe next year if they do it again.
Yeah, well, this is the weird thing, right? And I'll maybe talk about this in a second. When we first looked, ticket prices, they're like 10,000 USD.
Crazy.
Like it was clear from the outset that they wanted this to be a high roller event.
Yeah, and Vegas is already quite expensive in of itself. I mean, most of the hotels on the Strip are really expensive, and then certainly during that event, you'd have to be off the Strip, and it is just an expensive trip in and of itself. But then you add the Grand Prix on top of it, and it becomes this massive thing.
Yeah. Plus for us, like flights and everything that goes along with it, like it would have been. I mean, maybe if it was a little bit more reasonably priced, like as a once in a lifetime thing, like we got to go to the Vegas Grand Prix. That's like crazy, but very expensive. So after months of, I guess it's fair to say, completely disrupting Vegas with construction and roadworks, the Las Vegas Grand Prix is on. I mean, when we were there May, in May, and what is it, November?
Yeah.
So we were there in May, and half the Strip was just being torn up because they were resurfacing.
Yeah, they'd already done a significant portion of it, I think, when we were there. So
they were just going section by section down the whole Strip.
Crazy.
And so
it's been a project,
And this was the EDC, so there's already a lot of traffic, but that just made the traffic just brutal. Having the Strip, parts of the Strip closed, it was horrible.
Yeah.
But it was 26 months ago when engineers from Tilk, a German firm responsible for designing 11 current F1 tracks, gave the green light that they could transform the busy streets of Las Vegas including a stretch of the Strip into a racetrack. The streets would have to be suitable for high-performance vehicles traveling up to 212 miles per hour, the estimated top speed this weekend. It's pretty insane. Preparing the roads for F1 races meant removing 5 to 10 inches of asphalt and replacing it with 60,000 tons of base layer pavement and an additional 43,000 tons of intermediate pavement and race layer surface.
Crazy.
It's the stats behind like organizing one of these things, especially a new one.
Yeah.
It's just crazy. The track needed 1,750 light units to illuminate it at night. Other temporary additions to the city include 18 grandstands, 10 hospitality club structures, 7.6 miles of track barriers, 4 extra vehicular bridges, and 3 pedestrian bridges.
Wow.
And like that's a lot, but you also have to remember that this is like right in the middle of the city. So like this is not like in the sticks where they just got to build this thing and no one's interrupted. They have to build this in the middle of Las Vegas Boulevard is where they're building it.
Yeah, it is crazy. Oh.
It's hectic.
Yeah.
I've seen a lot of crazy images coming out of Vegas, like even weird stuff. Like they had to the giant palm trees along the Bellagio fountain, ripped them out. Yeah.
Oh no.
They had to rip them out to put grandstands there.
Put it back.
Yeah. You know the Venetian, how they have that nice pool area?
Yeah.
Drained, grandstand over the top of it now.
It's crazy.
Yeah.
That's got to be, I mean, obviously there's so much money, but there's got to be so much like logistics and like, okay, how much are we got to pay you to do this? And then, Jesus.
The little boat people have the week off. The people that, take people on the boats.
Gondolas? Yeah.
Yeah, gondolas. That's right. Yeah, that's right. So yeah, it's a big thing, but a bit of history. So the Las Vegas Grand Prix also is the only Formula One race owned by the company that owns F1, which is Liberty Media, based in the Denver area. They bought F1 for $4.6 billion back in 2017, and in 2019, the group began eyeing Nevada for its next new circuit. The deal between Liberty F1, the Las Vegas Convention and Visitors Authority, and with the casino partners, including MGM, Caesars, and Wynn, is for 3 years, but the intent is to stay there for much longer.
Oh, right. So they're actually going to do multiple events there.
Definitely.
Yeah, well, that's actually that makes a lot more sense. I thought it was just for 1 year. I was like, this is a crazy.
This is like a permanent fixture, as I'll talk about in a second. Yeah. In February 2023, Clark County, which has jurisdiction over the Strip, passed a resolution supporting closing of the roads to make the race possible for at least 10 years.
Wow.
Yeah.
That's crazy.
I mean, that's why it's been so brutal this time around, is because all of this resurfacing is like the road is designed to last for like 10 years.
That makes sense.
Yeah. Like it's a proper racetrack surface that they're putting in, which is kind of cool, because then when it opens back up, people just driving along the Strip normally will just be like on this road is beautiful.
Best road in the US.
Yeah, exactly. Yeah. So Formula One bought a block of land just off the Strip a couple of years ago, I think, for $240 million.
Right.
So they actually bought a block of land, and then on that block of land, that's where they build the permanent pit straight structures.
Right.
So the paddock.
Interesting. Yeah.
And then the rest of it is the temporary.
Gotcha.
As the race weekend happens.
That makes sense. Yeah. Interesting.
The construction of the paddock building and its facilities is estimated at $480 million. So there's a lot of money going into it, really.
Yeah.
So they got to get some money out of it. But
Jeez.
yeah. The concept of a permanent race has been a challenge for locals and tourists. This is where it gets hard, who have had their plans disrupted by F1 for nearly a year. Not only did resurfacing the Strip lead to lane closures and other traffic frustrations, but the construction also extended to the side streets and back roads that locals have long used to avoid the congestion of Las Vegas Boulevard.
Right.
This left the typical 20-minute commutes home taking up to an hour. So that's the real hard bit that Vegas residents have had to live with.
Yeah.
Because it's not like just, we're just going to pop this thing up for the weekend. Sorry, Las Vegas Boulevard's closed for the weekend. Like, they've had to do this prep work for like months, if not years at this point. Like when we were there, they were literally tearing up the Strip, and that was half a year ago.
Yeah, it was. I was going to say it was bad enough, but people were still driving down the Strip, at least when we were there.
Yeah.
At least parts of it. But now it must be just Must have just been chaos the last couple of months.
Yeah.
Must have been so bad.
A few weeks before race day, organisers put a film on the glass barriers over the pedestrian bridges. So all those pedestrian bridges that go over Las Vegas Boulevard that we were walking over?
Mm-hmm.
So they're still open because people need to obviously walk around the strip.
Yep.
But they've put up massive glass film so you can't see you can't see over the bridge.
Right.
So that the idea is that because the cars go down Las Vegas Boulevard and people still need to walk over those bridges, so you can't see the race.
Right, so people won't stop there, I guess. And just
but that's
walk
the
away.
thing. People are getting so annoyed because, unfortunately, America is still pretty new to F1. They don't really. It's new for them.
Yeah.
Or it's not new for them. They've had COTA for a long time, but it's only getting popular now. And for a lot of these people, especially, it hasn't been in Las Vegas in the modern era. They don't understand that they need to block. This happens everywhere. They do need to block the view lines from the bridges, the pedestrian access bridges, because people do just stop there.
Stand there,
Yeah, when the race is going. It's supposed to help you get over the top of the track from this part of the paddock to the other.
Yeah.
And it is a safety thing. You can't have people, as much as this sucks because, it's a great view of the racetrack, you can't have people stopping on the bridge.
Yeah. It does make perfect sense.
Yeah. The traffic needs to be flowing because there's so many people there. It needs to keep flowing.
Yeah.
But anyway, so that's something that annoyed people. So they've been there's footage of people ripping the films off and but
of course.
Yeah, getting really angry at it.
Yeah.
But yeah, in the end, it's expected to fuel $1.3 billion in economic activity.
Whoa.
Las Vegas tourism and F1 officials estimate more than twice the projected total for the 2024 Super Bowl. F1 Las Vegas Grand Prix CEO Renee Wilm said 140,000 visitors are anticipated at the event.
That is crazy. Yeah. And with the way that it's set up, it's just there to chew money from people. With the casinos and the food is expensive and the
Vegas
attractions.
is already like that.
That's what I mean. You're putting this event there, you're sending people into a place where they are going to spend an enormous amount of money outside of the race, let alone on the race.
Yeah.
So
the only interesting thing is that it seems as though they pushed it a little bit too hard at the start. They were aiming too high. Because in the last month or so, as the race is fast approaching, very curious things happened, Hamish. All of the hotels on the strip are getting way cheaper for the Grand Prix weekend. And the tickets are now starting to come down in price.
Yeah, so maybe they just did the numbers wrong.
Awkward. Yeah.
Uh-oh.
It's actually quite funny. Apparently you can get at the start, they wanted $6,000 for the weekend at one of the Vegas hotels, and now they're settling for $400.
That's crazy. Yeah, usually it's the other way around. Usually they
The
start
closer you
out
get.
cheap, and as they sell, then you can raise your price. So it's funny, but I guess they just thought, I don't know. I guess they thought there'd be the demand for it.
So there's a bit of criticism on F1 at the moment for cash grabbing or trying to cash grab too hard, especially because yes, it's been so popularized with Drive to Survive on Netflix, but they're being criticized. They don't quite have that foothold, especially in a new market like Vegas, where they haven't gone to. But Texas is fine.
Yeah,
they've had it in Texas at COTA for ages, so they're all used to it. They love it. But new market, high rollers like Vegas, still on the fence, hasn't quite worked out. But I guess we'll see.
Yeah,
we'll see what the crowds are like.
Yeah,
over the weekend.
Yeah, where's this empty stands?
Yeah,
I don't think so. But I guess we'll see.
Well, on the live stream of the opening ceremony, where they had heaps of acts come on and sing songs, and they had the drivers do their little parade and everything like that. There's so many empty seats.
Oh, really?
Yeah, and on the live stream, they were just playing fake crowd noise the whole time. Yeah.
Wow.
So they must be a little bit concerned about it.
That's insane.
Yeah.
That's really surprising. Wow.
Yeah. Anyway.
Well, hopefully,
I'm looking forward to it.
Hopefully, they don't go bankrupt trying to do this.
Yeah,
so I want to see more of it. I haven't even seen the first one. I want to see more.
Yeah. But anyway, that's the Vegas Grand Prix, everyone.
There you go.
And a little bit of the economics and the logistics behind it. It's quite interesting, I think.
Yeah, the numbers are just so insane for Formula One. It's just
and it's crazy that they just thinking, should we buy a block of land next to the strip? We have to resurface all the roads. We have to build 20-something grandstands. We have to build the paddock. And it's going to cost $500 million. Yeah, let's do. Yeah, definitely. Yeah, let's
Yeah.
do that. That's an obvious one.
And it just like happened.
Yeah.
It didn't just fail halfway through. You know what I
Yeah.
mean? I guess projects do fail from time to time, but
if there's enough money in it.
yeah,
Hamish.
if you got enough money to throw at it.
Yeah, if
It's
they
just
expect
crazy
enough money
that
out of it.
organizing all of that and being able to do it. Insane.
So now there's a permanent paddock club in Vegas with a big, massive F1 logo,
Right.
LED logo on the roof
Oh,
of the
that's
paddock
cool.
club. So that'll be a permanent fixture to Vegas from now on, which is
Wow,
cool.
there you go. The latest brand on that
Yep.
on that strip.
To join this, to join the strip. All right, Hamish.
Let's talk about McDonald's and Hungry
Macca's.
Jack's. Which is not a great story to talk about because it's 1 p.m. here and I'm very hungry.
Yeah, we'll go get some after.
Yeah. But so there's McDonald's and Hungry Jack's have been in a court battle. Did we talk about this when this first happened? I feel like we might have, but it was so long ago that I'll give a complete refresher
Right.
of what the situation is.
Yeah, I might need it.
But this was back in 2020, and I reckon we probably did talk about this. But in 2020, Hungry Jack's, which is the Australian Burger King, for those outside of Australia, they released a burger called the Big Jack. Not essentially, as a direct competitor to McDonald's Big Mac.
Yeah.
When I say direct competitor, I mean it's the same
Yeah.
burger. It was pretty much the
interesting.
identical burger.
I haven't heard of, what do you call it? A Big Mac. I haven't heard that. I've heard of the Big Jack before.
Yeah, yeah.
I haven't heard of a Big Mac.
Yeah, big.
What's the Mac
Big
mean? I
Mac.
don't understand.
Yeah, I don't know. Yeah, never heard of it. So anyway, there you go. So Hungry Jack's came out with this burger, obviously being a bit cheeky and having a go at McDonald's, and their thing was that it was a Big Mac, the same shape, the 3 layers of bun or whatever, but it was bigger. That was like the whole thing. It was like, okay, it's just a better Big Mac, basically.
Well, they should have just called it Bigger Mac.
Yeah, well, they should have. Well, maybe they would have been in worse legal trouble if they'd done that. Maybe. But regardless, yeah, McDonald's was not having it. They very quickly, McDonald's Asia Pacific, sued Hungry Jack's in federal court in Australia, arguing that Hungry Jack's was infringing on their Big Mac trademark. So how dare they? How dare they? And essentially, they were arguing that they were in danger of deceiving. Hungry Jack's was in danger of deceiving consumers that its products were being sold at rival stores. So their argument was basically that people would see Big Jack and think that McDonald's had just allowed the burger to be sold at a rival restaurant, which I don't know if that's ever happened in the history of restaurants.
You'd have to really not know anything to believe that.
Exactly. And the funny thing is, McDonald's kind of like walked straight into Hungry Jack's plans because immediately after they got sued, they ran another advertising campaign that they'd already obviously been working on, specifically referencing the court case. So this was, I think, Hungry Jack's plan all along, was essentially to bait McDonald's into a lawsuit and then advertise and run an advertising campaign about McDonald's, basically smearing McDonald's for suing them.
Right.
And it essentially allowed Hungry Jack's to come out and say, in the ad, they were like, there's no confusion because the Big Jack has 25% more Aussie beef. Basically saying there's no confusion. Ours is just way bigger.
That's so funny.
It's very, very cheeky.
Ding, ding,
it's,
ding.
I
that is
it
a
was very
great
funny.
play. McDonald's have walked into it.
I think so. And I think, give a round of applause to Hungry Jack's marketing team for putting that together.
It's risky.
They obviously ran, I hope they ran the numbers on getting sued and maybe that's going to cost them.
Yeah.
And they decided, it's worth it. We get a bunch of free publicity.
Yeah.
We get to run our own advertising campaign. And also we get to sell a burger that is verifiably very popular, essentially. Or at least that style of burger. So that's what happened in 2020. And that's kind of the court case that's been kind of playing out over the last couple of years. McDonald's argument essentially came down to the fact that the burgers were very visually similar, which they are.
I've just looked them up. Yeah, they are. They do look visually similar.
They are visually similar. And the name is kind of a play on words. Big Jack is obviously a play on words of Big Mac.
Yep.
Hungry Jack's argument, the chief marketing officer said, while there was an element of cheekiness in the name, I did not consider there to be any risk that consumers would confuse the trade source of the Big Jack hamburger with the source of the Big Mac hamburger. So basically saying, no, we didn't intend on confusing consumers. because that's ridiculous. Like, well, how could someone be confused that, there's a McDonald's burger being sold in a different restaurant was essentially their argument. And the court agreed. That's the news this week. The court agreed with Hungry Jack's and basically dismissed the case. So in a judgment handed down on Thursday, Justice Stephen Burley ruled that Hungry Jack's Big Jack and Mega Jack were not deceptively similar to McDonald's burger and that they did not infringe on the rival's trademark. The justice said, McDonald's pleads that Hungry Jack's deliberately adopted the Big Jack and Mega Jack marks for the purpose of promoting in the mind of consumers a connection or affiliation between Big Mac and Mega Mac hamburgers, Justice Burley said.
Interesting. Yeah, hectic.
So, yeah.
I'm glad that they didn't side with McDonald's. That would have just been so sad. Like, ugh.
Yeah.
I hate it when stuff like this gets shot down. Like, it's just a play on words. Like, it's just, like, obviously they're comparing it to the Big Mac, but, like, good. Yeah. I mean, if they can make a bigger, better burger, then good.
Yeah.
That's good for the consumer.
Yeah.
If they can run their ads and say, oh, the only difference is that we put more in our burger, so come buy ours. That's good. Make Macca's offer a better product.
Yeah, yeah. It's good that they can't like basically trademark the way that the burger was made. That's like that would be pretty insane if they could trademark how a burger looks. Well, basically,
you can't put the 3-layer kind of.
No, you can't put a bit of bread in between your burger. Basically.
Yeah, sorry.
But there was one win for McDonald's, which I thought was a funny outcome of this. Hungry Jack's got a little bit too cheeky in their advertising. So remember how they said that their burger was 25% more Aussie beef? Well, McDonald's called them on this and said, no, it's not.
Oh, really?
So in court, they weighed and compared the beef in the burgers and found that the Big Jack only had 12 to 15% more beef.
Lol.
So the court found that Hungry Jack's had breached Australian consumer law.
False advertising.
So they got fined.
That's so funny.
Which I thought was kind of a funny twist of events. Like McDonald's being like, wait a second, let's weigh them. Yeah. Weigh it.
Bring in the Jacks. Bring in the Jacks and bring in the Macs.
Someone bringing in like a burger on a pillow. Like
In the left corner, in the blue corner, we have the Big Mac.
Yeah.
Weighing in it.
So there you go. A fast food restaurant deceptively marketing in an ad. It's not the first time that's happened. If you've been paying attention, I don't think I've ever had a burger look how it looks in the ad or on the billboard.
Yeah. I think that's the overarching issue here. Can we take them to court? Can we take all of them to court for misleading advertising?
Yeah, it's
for showing us the most beautiful burger that I really want to eat.
Yeah,
and giving me some slop.
Yeah,
the patty's here, the cheese is like hanging off it, the burger bun's like
not even close. Not even close. It's funny that is allowed. Like they're allowed to like show this burger that is just like this burger never exists. Like you only see that burger in your dreams. Like no one's ever made a burger. Like have you seen the way they make those burgers for the ads as well? Like it's all like, glue and like
glued together and like they spray it and then it's just like
it's not it's not even a real burger. Like it's fake. So, anyway.
It's hectic. They only just very minorly cook things so that it doesn't like look too cooked and that sort of
ridiculous.
It's crazy.
So anyway, there you go. I think that's a win for Hungry Jack's though. Even though they got that slight loss of being a little bit ambitious in their advertising, good job, Hungry Jack's. I respect it. But I still will eat at McDonald's. Thanks.
Fair enough. All right, Hamish, tell me about what's going on with inflation.
Yes. We got US October inflation. Nothing crazy, so I'll kind of go relatively quickly through this. Headline CPI came in for the month of October at 3.2%, which is obviously quite good for a headline number. Month over month, so just in October, how much inflation was there? How much increases were there in prices in October? 0%. So there was zero inflation in October on a headline basis, although, of course, we can also look at the core CPI, which strips out the volatile food and energy segments. Year over year, core CPI rose 4% year over year, so a little bit worse than headline inflation, and certainly still outside of that 2 to 3% range that most countries are trying to get to. Yep. And on a month over month basis, this was a 0.2% increase, so pretty modest increase overall, which is pretty good news.
Nice.
Overall, inflation has just continued to improve in the US. Declines in the energy categories continue to drive inflation down. Gasoline was down 5% month over month. Food rose just 0.3% month over month. And transportation was the biggest increase at 0.8%. month over month. Transportation was also the biggest category for annual inflation, followed by shelter at 6.7%.
Right.
So that's pretty much it. The only other thing I'll note is that the CME group data, which does some kind of research on market movements, now sees that the market is pricing a near 0% chance of any further rate hikes. So essentially, financial markets think that because inflation has continued to improve, there's no more rate hikes.
Right.
Which, the market is wrong sometimes, shockingly. But interesting to see that the market doesn't think Jerome will get his final rate hike, which he's kind of wanted to do.
Jerome's final hike.
His final hike, the final pull of the lever. He's been kind of baiting it for
Just
a while.
one more, Mum.
He wants to do one more this year. There's only 1 month left, so will he do it?
Ah,
I feel like
there
I'm
you go.
talking about sports here.
Yeah. Dun, 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 dun.
Yeah.
Yeah, crazy. Yeah, it is weird. Inflation is just like a sport now.
Yeah.
What's next month's game going to look like?
Yeah.
Are they going to raise rates? Oh my gosh.
Yeah, exactly.
There you go. I mean, that's good. No inflation month over month. Headline 3.2, core at 4. Still too high, and I'm sure Jerome will say the same. Inflation is still persistent and too high. But whether they raise the rates or not, anybody's guess. I don't know.
Yeah. There you go.
What are they going to do, Hamish? Tell me. Are they going to raise rates?
I don't know. That's my official. That's my official position.
I thought don't you have like a YouTube channel
That's
where you
my-
talk about the stock market? Aren't you like good at this?
Oh, is this off the record?
This is well and truly on the record. No, let's move on.
Yeah.
All right, mate. What should we do? We have covered everything. Let's do a couple of Q&A questions.
Yeah. Oh, here I've got one for you. We got this on our last episode. Would you say that hectic is your new favorite word?
Oh, hectic is hectic, bro. Hectic is just so hectic.
Yeah.
Yeah.
I think that's your favorite word at the moment.
It is.
Yeah.
I don't know where I pick it up from. It's not an original thought. I have very few original thoughts. I'm just wondering where you know how you kind of pick words, phrases, things up from other people or other things. I'm wondering where I've picked up hectic.
Hectic. Yeah, I don't know.
Yeah, I don't know either. Someone. Maybe it's a Brandon Van der Kolk original.
So what do you like about the word hectic? This is a deep question. I need a
Oh, you need.
I need a 5-10 minute answer on this.
Oh,
right?
okay, jeez. It's kind of like the structure. I mean, I like 2-syllable words. Hectic.
Yeah.
Kind of flows like it's got a kind of harsh sound at the end, in the middle. Hectic.
Yeah.
So
Snappy. Yeah.
Yeah. You can also say it very quickly. It doesn't get you bogged down.
Yep.
And it has a little pizzazz. It has a little impact.
Wow.
You know?
That's just beautiful.
All right. Let's. Can we move on to an actual question? Please?
Yeah, I'll give you an actual question. Let's see. Oh yeah, we had a couple of interesting questions about just aside from investing, actually, just about YouTube and kind of side hustles that maybe I thought we'd answer. Did either of you starting out on YouTube promote your channels, and if so, how? So I guess the question is, did we do any kind of like we're making videos on YouTube, but outside of YouTube? Did we, do anything? Were we like to do any extra promotion or bringing extra traffic on?
I didn't.
Yeah.
I don't think it's worth it, honestly.
No.
The algorithm is a bajillion times more powerful
It's
than
insane.
than anything you can like posting it on Facebook or telling your friends about it. It's not going to work.
Yeah.
You just got to make good content and you got to let the algorithm do its thing. I mean, if you make really good content, if you have no subscribers, so no one's regularly tuning in, and you have no friends, let's say. So you're basically like Hamish over here. No, but if you have like no subscribers and you just make really, really, really good content, you will get subscribers.
Yeah.
Like it's plain as simple.
Yeah.
You don't need to try and game the system by getting friends to click your videos or watching it on repeat or anything like that. You just need to focus more on your content.
Yeah. Good content. And then there's obviously like an element of time. Like you've got to you got to put in that consistency and build somewhat of a brand on YouTube so that when people see, you in the recommended, they're like, oh, I saw his last 3 videos, his or her last 3 videos, and they're really, really good. So I'm going to click. And that's a huge part of YouTube is sometimes it just takes a bit of time to just not only get better at making content, but to build that trust with your audience. But once you can get that, it's like you get the snowball rolling.
You do.
That YouTube's own promotional avenue, which is the algorithm, is incredibly powerful. But yeah, I
just got to persist, and you got to keep striving for that one video that launches everything.
Yeah, you know what I will say? Maybe it's related to this. one thing I did do starting out was I tried to collaborate as much as possible with other channels in the finance space. So I guess you could call that promotion in some aspects, like where I would go on their channel, they would come on mine, and then maybe we kind of expose each other's audiences. I don't know if that's as relevant today as it was when we're getting started. Just because I think that the algorithm is it's just so good. Like I think you probably could accelerate your growth maybe at the beginning by doing some of those things, being in the comment section of other people's videos and just making sure people are aware that you're in the community and contributing. But yeah, that algorithm is just, it really is just a case of make good videos, get better at making good videos and do it consistently.
Yep. All right, let me ask you this one here that we've had sitting in the document for a while. How can I use the discounted cash flow model on a company that doesn't have free cash flow? This is in part due to this company using free cash flow for growth, but I don't know how much goes to growth and how much goes to maintenance.
Yeah, I think the short answer to this question is you can't really. Obviously, that's gonna come up from time to time. You'll have these great companies that are putting all of their free cash flow back into growth. But in order to figure out what the company is worth, you are going to have some gauge of how much of what they spend of that cash flow that's going out, how much of it is necessary just to maintain the business, and how much of it is extra spending that they're choosing to do in order to grow the business. And if you can't, a lot of the time you can't make a differentiation between those two. There just isn't enough information. But you kind of need to in order to be able to invest in a company if it doesn't have any free cash flow, left over after their capital expenditures. So I would say, personally, I don't know how to do that. Yeah. I don't know if you have any thoughts on that.
No, I don't have any thoughts. I'm the same.
The only thing I will add on top of that is that's more of a, I guess probably a Warren Buffett, Charlie Munger value investing thought process. When it comes to kind of traditional corporate finance, there are models for assessing companies that are unprofitable and for assessing brand new companies or assessing mature companies. So if you go down the traditional finance route, there will be methods that are taught, and you can probably find a bunch of them on YouTube that will teach you how to do these specific things. Whereas a Warren Buffett or Charlie Munger would probably say, don't even try. It's too difficult of a task. Yeah, that's what I would say.
Yep. Go see Aswath Damodaran's channel.
Yes, that's the name. I was blanking on the name, so thanks for that.
Aswath Damodaran. He is just what do they call him? Like the valuation, I don't know.
The Dean of Valuation.
Dean of Valuation.
Yeah. I think he teaches at I'm blanking on the school as well now.
Blanking on everything.
We're
getting hungry.
Yeah, I am getting hungry. But he teaches at a school. He uploads lectures, so you can just watch full.
Yeah.
He teaches valuation at university or college in the US, so you can literally just watch his entire thing, his entire course, and just take the course if you wanted to learn all of the ins and outs of valuation.
Yeah.
So yeah,
definitely coach it. All right, guys. We're hungry, so we're going to go get some lunch. But no, hopefully you guys enjoyed this episode. I always like the ones that we do in person. They're just so easy.
Yeah, chill.
It just flows very well. We had some really interesting topics, I think, to talk about today. But yeah, thanks guys very much for tuning in. Hopefully we can do more of these in the future. Finally dragged Hamish up to Canberra.
Yeah. I'll come back soon.
Yeah. Sometime.
I was a little scared, but it's not too bad in here,
Yeah, we don't bite.
It's not too bad. Yeah.
All right. Well, with that said, guys, we are going to bounce. We're going to go to Macca's. We're going to get a Big Mac. Which one?
Wait, which one? Who sells which again?
I don't know.
I feel deceived.
It's so hard to know these days.
Yeah. Advertising corrupt. Yes.
All right. We'll see you guys next week.
See you guys.